Good morning, good day. My name is Paul Edwards with Possibility Plus Financial Services. If you need any form of life insurance, call me now at 321-557-1155. I can help you with obtaining term life, whole life, universal life, final expense, mortgage, or keyman insurance. I can also provide annuities and long-term care. You can call me now at 321-557-1155. My name is Paul Edwards, your financial advisor. And as customary, we call today Insurance Mondays, where each Monday I look at some of the more frequently asked insurance questions. So our purpose is to educate so that you can make the right decisions when it comes to your life insurance, your health insurance, your long-term care, your annuities, or your Medicare needs. And today the questions I'm going to answer is, what are the three main types of life insurance? The three main types of policies, and I'm reading here from guardianlife.com. The three main types of policies are term life, whole life, and universal life. Term life policies provides affordable temporary protection. Whole life and universal life policies are called permanent insurance because they are designed to provide lifelong protection with wealth building benefits. So term life, the form of protection, lasts for a limited time, typically 10, 15, 20, or in some cases up to 30 years. Most term policies feature level premium, but with some premium payments may periodically increase, for example, at 5 years intervals. It can be more affordable than universal or whole life. Still, when your term ends, you are no longer protected. You either have to apply for a new life insurance policy at a higher cost because you're older, or go without coverage. So in essence, a term life policy lasts for a specific period. Let us say you are 50 and you take out a 20 years term life policy. It's going to cover you until you are 70. And in most cases, it is going to be a level premium. And so your premium remains level for that 20 years. Come year 21, if you want to keep that policy, the premium is going to increase dramatically based on your birthday. And then what tends to happen is that every year on the anniversary of the policy, the premium increases. So many persons, what they try to do when that policy expires is to take out a new policy. But new policies depends on your health. And if you most times when you are older, there are many health issues and you might not be insurable. So those are some of the things you have to factor in. So that's a term policy. So one of the benefits of term policy is you get high coverage, high amount of coverage at a lower cost. Then you have a whole life policy. This is a permanent life insurance that can provide guaranteed protection for the rest of your life, which also builds cash value that can be used for things like policy loans or even cash supplement retirement income. Whole life policies don't expire as long as the premiums is paid. A mutual life insurance company right, may also provide dividends. So in other words, a mutual life insurance company generally is a company that is not traded on the stock market. So when the company makes a profit, they tend to pay dividends to the policyholder. And that dividends helps your cash value to grow. So remember, it's a permanent policy that builds cash value. And many times you have access to the cash value that you can use as a loan. But if you take it as a loan, then you're going to have to pay it back. If you don't pay it back, they are going to add the annual interest. So the annual interest can cause the loan to increase, which will also reduce the debt benefit. Because what they will do is upon your passing, they will minus the loan plus the annual increase of the interest that you don't pay and give your beneficiary the difference. In today's society, you hear many persons talking about banking and yourself. It's a concept that they're speaking about where you have a whole life insurance policy. It builds up cash value. You can take out some of the cash value and use it, and then you pay it back. And the final policy is universal life. Like whole life, this type of policy provides permanent protection and can build cash value. However, universal life policy can give the added flexibility of adjusting your monthly payment within a specific range to help deal with variation in your income. Universal life flexibility must be monitored to help ensure the policy does not lapse. So with a universal life policy, it's a permanent policy as long as you pay the required premium. With a whole life policy, the premium is set, and that's the premium for the entire life of that policy. As long as you have the whole life policy, that's the premium. With a universal life policy, however, they have what you call a premium band. You have what is called the guaranteed premium, which means that is going to guarantee that the policy will not lapse, let us say for 15 years. And that premium, so for example, the 15 years guaranteed premium might be $50 per month, for argument's sake. $50 per month. And that will guarantee you that your policy will not lapse for 15 years. Then you have a next band, and let us say this band now is $80. And that is going to guarantee that your policy is going to go until, say, age 90. Then you have a third band, and let us say this third band is 120. That is going to guarantee that your premium, that your policy remains in force until age 121. So most persons take out this policy and they pay the $120. They want to make sure that their policy remains in place until their age for 121. But something might happen and you might have a cash flow issue. And so with the universal life, it gives you the flexibility to reduce your payment anywhere between that band until you can catch up back and go back to your prior level. So those are some of the flexibility with a universal life policy. You have to monitor it, because if there's not sufficient cash, then it could cause your premiums to increase and it could cause your policy to lapse. So those are the three types of policies: primarily term, whole life, universal life. Next week, I will speak to you about which one you should choose and also give you some information on final expense insurance. My name is Paul Edwards. You can call me at 321-557-1155 for your life insurance, annuities, long-term care, health insurance, and Medicare needs.